You're very welcome to our latest urgent market update video. Now, this is Friday, the 6th of November, 2023. You may very well be aware we've just had a major news event out of the US. It's non-farm payroll numbers. So we're able to see and assess what is the state of employment in the US and how strong is it for the economy. And we've just had those numbers released just a little while ago. So this is a bit of a follow-on from our previous urgent market update video, which we've hoped you've been able to at least familiarize yourself with. So the question behind this particular video is the fact that we do have massive upside surprise again for the US economy with this non-farm payroll number. And the question is, what does it mean from here? So you may have joined us over the course of today's trading session. In fact, over the course of the majority of this week's trading sessions, we've been talking about this in quite some detail. We've been able to position ourselves accordingly with some fantastic opportunities in the pipeline, and we want to discuss them in a little more detail for you very shortly. So let's get straight into this video. Okay then, so as the title suggests, we have had a very significant upside surprise in these non-farm payroll numbers, and it does have a big impact on not just the economy as a whole, but more so to do with the Fed and their approach to central bank monetary policy decision making. So let's break this down for you. Let's start, as we always do, with our risk warning. Just take a brief moment to familiarize yourself with our risk warning currently up on the screen. And let's get straight into it then. So I want to just draw your attention firstly to this particular news event. So just to take a little step back, and if you look at our most recent urgent market update video as well, we spend a bit of time talking about how these job numbers could impact market sentiment and therefore market activity. And on Tuesday, we saw a really positive news event, which brought about a pretty bearish and negative market response. And it's really to do with the Fed. You know, the more jobs that are available, that is counterproductive for what the Fed are trying to do. So it's broadly viewed as being quite inflationary for the US economy. And of course, that is what the Fed are trying to raise rates in order to do, is bring down inflation. So we had a positive news story on Tuesday, followed by a negative market reaction. If we move it along to Wednesday, we had ADP numbers which surprised to the downside. So we had a negative news event on Wednesday, and we had a positive market response. On Thursday, we had the unemployment claims come in very much in line with expectations. Broadly speaking, we didn't really get much of a market response to any great extent, although there was a little bit of buy the rumor, sell the fact once we saw this non-farm payroll number creeping in. But broadly speaking, not that much of a market move off the back of the third major employment number of the week. Now, the final one is by far the most important. This is your non-farm employment change number. This is your government stats regarding employment in the US. And we're expecting 171,000 jobs to be added. We saw 336,000, so far more jobs than was anticipated. In fact, you know, those analysts that come up with these expectations do need to probably take a good hard look at terms of the information they use and how they come up with these numbers, because far too often they are considerably off in terms of the expectations. So then the market reacts accordingly. Just as a quick commentary, unemployment rate remains at 3.8, still very, very low. And we're still seeing wage growth, although it's coming down. It certainly hasn't pushed higher, which was the expectation. Average hourly earnings coming in positive 0.2, but not as high as was expected. So the question is, what was this likely? This was regarded as a positive news event. So we would interpret that as a negative market response. And we're just showing you wholesale the trading screen that we've been looking at for the last few hours and over the course of the trading day. And what I'm going to do is just bring up the directional candlesticks that we had in place prior to this particular news event. And it is all very, very bearish. Even for a certain part of today, we had a bit of a bounce, bit of a bullish bounce. We were looking at these dollar pairs as looking a little bit bullish, but the overall bias for us as traders is very much to the downside. And you can see commodities lower, you can see the US indices lower. That is our overriding bearish expectation as a result of these job numbers over the course of the trading week. And these NFP, these non-farm payroll numbers, seem to just reaffirm that particular stance. So we're getting a lot of noise at the minute. There's a lot of volatility in these trades, but our expectations is that we're more likely to see further downside unless something significant changes. And the reason for that downside move is we're likely to see the Fed raise rates in November. That's what this news event is leaning towards, that we get a further rate hikes. And we know the Fed have recently said they're looking to keep rates higher for longer. This is also supported by bond yield activity, which is also pushing higher. You see the 10-year, we're now up at 4.8. We're on this elevated trend to the upside. The 2-year is up at 5.09. So even over the longer term, we're still talking about 5% interest rates coming down the tracks. And as a result, this is causing a little bit of panic and anxiety because the markets are now realizing that actually the Fed are more than likely to retain higher for longer in terms of their interest rate monetary policy outlook. So that is really, we just wanted to give you a little bit more context behind these trades. Not just we're heavily positioned in these markets to the downside right now, we will continue to be for the near future. So it's likely to present some fantastic opportunities for us as traders. And do feel free to join us as well if you do want to, if you need extra support and trying to take advantage of these opportunities. It's just about getting that timing right to see if you can fully profit from these current market conditions. So before I leave you, the trading opportunities that lie ahead for all the reasons that we've just discussed is the fact that we're likely to see further US indice weakness. So we're looking at the S&P 500. We're also looking at the NASDAQ and the Dow Jones as well. And another range of opportunities lie in the US dollar. There's many talking about this dollar weakness trade. It's, you know, we've been in that dollar strength trade for quite some time. Now that's going to start no, we're actually sticking with this further dollar strength trade. We have no reason to be shifting from that position as things currently stand. So these are the opportunities to try to take advantage of and focus in on. So look, on that note, we'll wrap it up there. If you do have any questions, feel free to email us at support@thelivetrading.com. We'll gladly get back to you as soon as we possibly can on that. So look, all that's left for me to do now is thank you for joining us for this brief video. Do stay tuned for our next video, which we will get out to you as soon as we possibly can. As soon as there's some sort of market shift, market development, we'll put that video together for you. And just to let you know that we do broadcast our live trade sessions every day, starting from 7:30 every morning UK time for our pre-market trade plan session, 15-20 minutes of analysis just to determine exactly what our plan is for the trading day. And then we execute that trading plan live every day for all of our traders from 8 a.m. for the European Open for the first hour or two. And then we're back again at lunchtime for another hour or two of trading activity around the US trading cash open. So it's important you do take that into consideration. And these times are UK time, so you might need to find your relevant time depending what part of the world you are in. So for more information, just go to thelivetrading.com and feel free to connect with us through our website. So on that note, thanks for joining us as always, and we'll speak to you soon. Bye for now.